Thank you for taking time being with us today. Tell us a little bit more regarding your background and your present focus.
Yeah, thanks, Diego. It's good to be here. My name's Aaron Young. I'm the CEO of Laughlin Associates. We're one of the largest incorporation firms in the United States. So we form corporations and LLCs, limited partnerships, nonprofits. And then even more importantly than that, we help take care of the corporate formalities, the board meetings, the minutes, the resolutions, the stock issues that most small companies don't do. And the problem with that is that it's required by law that you take care of all these things. But when you're one investor and you're buying a piece of property, you've got a couple of pieces of properties, and it's just you. The idea of thinking about sitting down and having a board meeting, a board of directors meeting by yourself, taking roll. Hello, who's here today? Me. Thank you. The odds of doing that are very, very low. So consequently, there are millions of companies in the United States that aren't meeting the law, which is no problem until they have a problem. So if they have a lawsuit, if somebody slips and falls in an apartment building, if somebody gets hurt on a job site, if somebody gets in an argument over maybe a transaction, then all of a sudden their business won't protect them, and they run the risk of losing a lot more than just a little argument over one little problem. So for 45 years, almost 46 years, our company has been helping hundreds of thousands of business owners from all around the world to not only make sure they're in the right business structure to do business in the States, but to make sure that business is operating properly so that it can do what it's supposed to do. That's protect the shareholder. That's what I do.
Everybody gets wise after they've been robbed. There's this a common saying. So what would you advise before they make some nonsense, small business owner particularly?
Yeah, well, so we have a lot of people that come to us. I call it, you called it wise after being robbed. I call it event driven. They've had some bad event and they say, that can never happen to me again. And so they come to us then. Now, it's so much better to avoid the problem rather than have to go suffer through the problem. So if somebody's really wise, they will take steps to protect themselves properly, understand the rules of engagement so that they stop the lawsuit before it starts, right? So what do? The first thing is, if you're going to be doing business here, especially real estate business here, what kind of business entity is it? A C Corp? So, okay, let me say this. In the United States, you have, you don't have any federalized corporate structure. So I used to own a company in Italy, for instance, and we had a very different way of engaging with the government, working with the notary, and so on. There was a lawyer that was specialized, as a notary. Have you seen those great big books with the ribbon wrapped around it? Okay.
Sure.
So what we did, I understand how to do business in Europe. In the United States, it's very different. You have 50 states, 50 little standalone states that all have slightly different rules. So what you want to make sure you're doing is, if you're coming in to do business here, that we're in the right business entity, that we're aggregating the investment money maybe into a company in a certain state that's more business friendly. And then, like, let's say Nevada, because Nevada is very, very protective of the shareholders, the officers, and the directors. So maybe the money comes into a Nevada company and then gets dispersed out because you're buying property in another state like Iowa or North Carolina or New York. The reason that you want to put a strategy together is because it gives the greatest likelihood of protecting not only the investment, but also the shareholder. Because in the United States, the shareholders can be held liable as well as the corporation or LLC being held liable. So it's super easy to avoid a problem as long as you follow the rules. And the rules, go ahead. Yeah.
Go ahead.
The primary rule that they don't follow is people that come in do not have board meetings. This is foreign and domestic owners. So they don't have board meetings. They don't keep minutes of the meetings. They don't pass resolutions for decisions that were made. They never issue stock. they treat it just like, oh, I just put a bunch of money into a bottle. You know, I put it here, but it's my bottle. This is my thing. It's not separate for me. It's mine. It's one of my assets. Until you start to understand that you as a shareholder are separate from that business entity, until you get that figured out, you're going to make a lot of mistakes. But once you figure it out and you go, oh, this thing exists on its own without me, I'm lucky to be a shareholder in what this thing does. It's sort of like I might own shares in Apple Computer, but I don't think that I own Apple Computer. Does that make sense?
Sure.
I do own it. I own some shares, but I don't think of it as mine. I think of it as something I have an interest in it being successful. So when people come over here and they set up a corporation or a limited liability company, we want them to be thinking that my greatest desire is to have that thing be successful. And in order for it to be safe and successful, it has to follow the rules of the state. And the rules aren't complicated, but they're outside of the knowledge base of most of the people who own the company, own that little business. And that's why people plug into our company for all these years, because we specialize in something very, very narrow. We form the entity and we make sure it stays compliant. And we do it for tens and tens and tens of thousands of companies. And we don't try to sell insurance or do lending or be invested in real estate or whatever. We just do this one thing incredibly well. And thankfully, our clients tend to stay with us. We have almost a 90% renewal year after year of our clients, because all our goal is to make sure you've got exactly what you need, nothing more, nothing less, and that it's working properly. Then you go out and make your fortune.
I got two questions here.
Yeah.
You don't have necessarily to have the same LLC in the same state that you bought the property?
Not necessarily. However, there are tax rules in different states that say if you've got income there, that even if you're not, so you could be incorporated in, let's say, California and own property in Texas. And Texas could say, since you're doing business here, you've got an apartment building and you're renting apartments to people because you got a house and you're renting it to people, you're doing business here. Your California company has to register, believe it or not, as a foreign corporation in Texas. So what does that mean? Well, that means you're paying California's fees and Texas's fees. You have to live up to the laws of California and Texas. So it can actually become confusing. The good thing is that in the United States, forming corporate entities is not expensive. So you may as well just go ahead. If you're going to do business in another state, you might as well just set up an LLC or a corporation in that state, spend a few $100s, and now you're not paying double fees. And it's interesting because you can set up strategies where one company over here is doing business with another company, same shareholder, but two separate companies. They're seen as separate in the eyes of the law, and they can do business back and forth with each other without owning each other. And sometimes from a strategic standpoint, that's very valuable. You have to remember, the United States has only about 5% of the world's population, but we have about 75% of the world's attorneys and about 94% of the world's litigation. So doing business in the United States is much more dangerous than doing businesses other places. We might want to go to Tehran or someplace and set up a company. It's probably safer in Iran than it is here, or at least from a lawsuit perspective. I mean, I love the United States and I do a ton of business with people here, but if you're coming in as a foreign investor, you have to understand that the nature of the business is more legal. There's more arguing in the courts. Again,
sure,
it's
go ahead.
problem. It's never a problem unless you ignore the rules. If you follow the rules, the courts protect you. If you ignore the rules, they say, sorry, you're on your own.
Does the scenario change a lot if, let's say, today I set up a LLC here in Portugal that buys an apartment building tomorrow in the US?
Well, so your foreign corporation can own the property in the United States, and then you're just subject to the laws there. Although your company needs to be registered as a foreign corporation doing business in that state. You see what I mean?
Sure.
You've still got it. They're going to want taxes and so on from you in something that's active, like where you're renting property. Now, I don't know if you want me to go down this road, but one of the good things for foreign investors in the United States, if it's a capital gains thing. So in other words, if you buy an apartment building, your Portuguese LLC buys a New York apartment building. Well, you're going to be paying taxes to the United States on the monthly rental, right?
Sure.
However, if you're just buying and holding and you're not actively doing business, you buy a piece of land and then 2 years later you sell it. The United States is a great tax haven for foreign investors because you don't get hit with the capital gains taxes.
I didn't know that.
There's two different tax laws in the United States. One for U.S. citizens and those people that are actively doing business, and another one for people who invest money in the United States and are just making capital gains. The capital gains is why you hear, maybe you don't hear in Portugal, but we hear here all the time. It used to be 20 years ago is Japan is buying up the United States. Now it's China is buying up the United States. Whomever has good, strong, solid currency, they like to come invest here because there's this tax haven treatment, just like going to the Caribbean islands or right near you guys. You've got Jersey and Guernsey and Sark and Isle of Man, right? You've got these tax havens right off the border of France there and up in the Irish Sea. Well, to the rest of the world, the United States is a fantastic tax haven, as well as a great place to make money. So, yeah, it depends on what you're doing, but your entity will help when you have an active business where you're making money. You're going to want to have protection so that you are registered properly in the state that you're doing business.
And this is all only related to real estate, or it could be any business? Let's say I open a bakery or some other unrelated business to real estate.
It's an active business, so then you need to be set up as a business in that state.
Okay, so and when you're referring to tax haven, it's all the states are the same way, or something like
yeah, because that's a federal tax issue. And again, it's only regarding capital gains. It's not regarding active income. It's only or even passive income. It has to do with capital gains. So you bought it for $100 and you sold it for $200. I have to pay taxes on my $100 increase. But in most foreign circumstances, you don't pay the United States capital gains tax on that.
Also, regarding syndication and capital raising, what would your advice be doing business in the US, being a foreign entity?
Well, there's two things. The first question is is that investor trying to just put money together? Like you have an investor coming in and they're going to actually go onto the promissory note of a piece of property. So in other words, they're not owning your company. They're just investing in a piece of property. You're doing a deal together. That's different than if somebody's going to be an owner of the business with you, a partner in the business. I mean, like a shareholder in the business.
Sure.
You have different rules. For foreign investors, most people will use either an LLC or a C corporation. LLCs are the most flexible structure when you're bringing in investor money and you know that you're going to be moving assets in and out. They used to use limited partnerships a lot on those. You're the general partner and you bring in an investor who's a limited, but now LLCs have provided so much better protection for the investor, for the person who's putting the deal together. Very good asset protection, very good tax treatment. So LLCs are the most commonly used vehicles now, but it doesn't really matter. LLCs and C corporations can be owned by non-U.S. citizens, non-U.S. residents. So, but you do need to use it in that state where you're doing business.
Let me get, because I want to get this point right. So I can establish an LLC in the US, and what
Yes.
would I have to face regarding the SEC ruling regarding Reg Vs and all sorts of this? Because basically we are selling securities, right?
Well, okay, that's different. So if you're aggregating money into a fund, that's selling a security. If you just came to me and said, "Hey, I've got this really great opportunity on this duplex," right?
Okay.
I could say, "Well, I'll put the money up as like on a promissory note. You're going to pay me an interest rate back. You're going to give me protection by putting my name on the promise or on the deed, so that I'm the one in the public record. That if something goes wrong with you, I can at least grab the real estate."
Sure.
That's not a security. That's just us partnering on a deal. But if you said, "Hey, we're putting together a $20 million fund, and you can invest in the fund, and we're going to be going out there and doing transactions in the real estate market, and we're going to give you well, maybe you're going to guarantee a return, maybe you're not. Maybe it's just we're going to be in the fund, and here's how we disperse profits in the fund." That is a security, and that you do need to go out and choose one of the several ways to with the SEC that you can raise money. The rules changed about a year ago for Reg D, with crowdfunding, with Regulation A plus, where you can raise up to $5 million a year. There's a whole bunch of new, more flexible rules now with the SEC to encourage people to be making capital investments in the United States, and to let people aggregate money together into a fund or into some other sort of a company that has an intention of maybe being sold to a public company or going public. You can absolutely be a foreign investor and do that. That's why the two structures that are designed to grow bigger, LLCs and C corporations, both allow not only foreign investment, but it doesn't have to be a person. It could be a company, another fund, or whatever. Whereas the entity that most family-owned businesses, like if I was going to own a business by myself, I wasn't going to bring in investors. It was just going to be mine or me and my spouse. Then we would set up what's called an S corporation, which is most of the, I hate to use this expression, but most of the mom and pop or the small, close, they don't have to be small, but they're closely held businesses, just one or two owners. Those are designed to just me be the owner, and so they don't allow foreign investment. They don't allow a non-U.S. citizen to be an investor or to own one. You have to be an LLC or a C corp. So those structures are set up specifically to take in non-U.S. shareholders and let them participate in the United States in this economy.
So just to hit the point home, a foreign company can establish an American real estate fund based in the U.S. and collect investment from the U.S. to invest in apartment buildings there. Is this correct?
Let me say it a slightly different way.
Okay.
A foreign company can become the shareholder of a U.S. company.
Okay.
Right. So they can become an owner of a new company, but I just wanted to make that part super clear. So
Okay.
A new U.S. company is set up with one shareholder. It's a Portuguese company.
Okay.
And then yes, that company in the United States can go through the process, can raise money, and so on.
And this company can raise money only from U.S. accredited investors, or it can raise money from anyone outside U.S. as well?
I'm not a securities lawyer.
I know.
So I want to be
curious.
really careful, but my experience is that anybody can invest money into a C corporation or to an LLC.
Gotcha.
So the idea is, yes, you could syndicate that.
Sure. And also
or a limited partnership.
And advice for people that are doing this, are there some pitfalls that you must be aware of?
Well, the biggest, I mean, if we're talking about the investors, or if we're talking about the one who wants to set up the to set up the company,
the one that is going to set up the company.
Well, the biggest pitfall that you're going to find, the first pitfall is trying to not get good enough advice, not to go out and work with somebody who's already doing this a lot. Because you can go online to, I don't know, LegalZoom or Rocket Lawyer, and you can form an entity very, very simply. But most people who are not involved in this business, what they want to do is they want to form the company for as little money as possible. And so they buy the cheapest thing that's on that website. Nobody's guiding them, right?
Sure.
So what they don't understand is that cheapest thing you're doing is doing a filing with the state that reserves your name, and the state says, yep, you get to use that. But it's an incomplete company. So it's not all the way fleshed out, right? I've said this before. It's you can pay a fee. I'm going to use an example. You ever been to Disney World?
Yes, I have.
Okay. So imagine you go to Orlando and you buy a ticket for Disney World, and it's $110 to go in for today. And then instead of going into the park, you drive away and you go to the beach, or you go to a cafe somewhere, or you go to another place. You have the ticket, you paid for it, you own it, but you haven't gotten the value that you paid for. You never went in, you never went on the ride, you never saw the show, you didn't see the fireworks. You paid for it, but you didn't get the value. That's what happens when people go online and they incorporate themselves. It's like they did minimum they had to do, right, to get that company set up, but they didn't do any of the other stuff that actually gives them the value the company's supposed to provide. And so if you form a corporation and you pay for the filing, you'll have articles of incorporation, but you won't have bylaws, you won't have stock certificates, you won't have a corporate minute book, you won't have any of the things that in Portugal that notary would require. You'd have to have it all, right? But because the United States is very loose in how they'll let things happen, they say, sure, pay the state is happy to take your money and then happy to not protect you because you didn't follow the rules. So the biggest pitfall is being incomplete, not having good information. And then the second big thing is to not get good. If you're going to be aggregating money together into a fund of some sort or getting shareholders into the corporation, you really do need to have a good securities attorney who can put that together for you. And of course, we work with security attorneys all over the United States. So when we have clients that need that, we know the right people to point them toward. But you can find them on your own. Google is a magical thing. It's just, you just want to make sure that when you come into a new place, you follow the rules. I know that one of the things we learned in the United States, it's basically when you have a company, you're what's called an at-will employer. In other words, I can hire you and I can fire you if you're not doing a good job, or if I just don't like you, I can fire you. But in Europe, I found out it's pretty hard to fire somebody. You can hire them, but you can't get rid of them. And so, you go in there and you think, oh, I've been running companies in the US for a long time. This will be easy. And you find out there's a whole different set of rules in a new place.
I still have scars, my friend. I still have scars.
Well, so just make sure you know the rules, or you're working with somebody who really, like, if you're going to be investing, make sure that you're working with somebody that really has done this before and that doesn't just talk a lot about it. They really know about it.
Gotcha.
And that will keep you out of a lot of trouble, because the United States of America is a fantastic place to make money. It's an easy place to set up a business. It's an easy place to engage in the market, but it's very litigious. And if you make a mistake, you're going to get beaten up on. And so just learn the rules and you'll be safe. The law is very good about protecting you.
Gotcha. And I have one further question regarding this topic, regarding the HB1 visa. So let's say our guy wants to open a bakery in the US.
He's going to come over.
Yeah, is going to come over. Are there anything that has changed now since Trump is now president?
Oh, I'm not aware of any change, but I'm not in that world. Again, I have immigration lawyers that I work
Sure.
with. We work with over 100 law firms here at Laughlin. We have terrific legal resources available to our clients. I just was visiting with a very, very successful California immigration lawyer, and we were talking about many things, including the current administration, the Trump administration, and nothing came up in the conversation. I'm unaware of anything, but I don't know that for a fact. So
Gotcha.
I would say always seek out the counsel of someone that in the United States, the term is substantial authority. Seek out somebody who has substantial authority on the specific topic. In other words, talking to a lawyer isn't good enough. I just spoke last weekend at an event in, I speak all the time. I think I was in Anaheim, California. And a lawyer heard me talk about corporate compliance. He said, I've been practicing for 15 years. I went to a prestigious law school. They never taught us anything about this. And he said, I'm involved in a completely different kind of law. I have nothing to do with compliance. And he said, I'm not in compliance at my law firm. So he's a client now. But but the point is, find somebody who's an expert in real estate law. Find somebody who's an expert in immigration law, because a divorce lawyer, a contracts lawyer, an intellectual property lawyer will know nothing about immigration.
Gotcha.
It's super specialized.
Aaron, advice to your younger self, what would you say?
Advice to my younger self. I started taking risks young. I started my first company before I turned 19 that had employees. And I've spent almost 36 years now running my own businesses. But the thing that I would tell myself now is dream bigger dreams, take bigger chances, do bigger projects, because somebody's going to do that project. Why not you? The first time okay, that's a good question you asked me, Diego. The first time and I'm not a house flipper, but I remember the first time I bought a piece of property. It was a house on 3 acres, and the acreage was dividable. So I bought the house. I divided it into the house with 1 acre and 2 1-acre lots. And we did a little bit of cosmetics on the house, and we sold the whole thing. And I made, in about 6 or 7 months, I made about $500,000. And I thought, why the heck did I not know about this before? Like, where have I been looking? How did I miss $500,000 right in front of my face? It wasn't difficult to do. It wasn't expensive to do. I just had never done it. So my advice to my younger self would be, step into places where you're unsure, get good mentorship, and just take the chance. Because the more I've done that, the more I've said, I'm going to try that now, I'm amazed at the things that just happen. And then I sit there and grin. You don't want to be 65 years old and looking back on your life and going, what was I afraid of? Why didn't I try? So that's what it'd be. Dream bigger dreams, take bigger chances, but make calculated risks. Get the best information you can. And it's amazing what you can do. And right now in this economy, it's very easy to make money right now. Very easy to make money.
And where do you see yourself and your company heading forward?
Well, I have multiple companies. So thank you for asking that question. So about 1.5 years ago, I started teaching a class called The Unshackled Owner. I'd been asked by so many people over the years, hey, Aaron, how do you build these companies that do millions of dollars in revenue, but you don't ever seem to go to work? Like, you never seem to go to the office, which is true. I don't. I learned many years ago how to build businesses that could work even if I wasn't there managing them. And my company, Laughlin Associates, that we're kind of talking about what Laughlin does, I spent 3 days there in 2016 and 0 days so far in 2017. I haven't been into the office one time, even though I've got dozens and dozens of employees. What I'm excited about doing now, Diego, I'm so glad you asked me the question. What I'm excited about is I've got such good people, such good management. I've got so many good things going that I'm now able to spend most of my time going out and doing something that I didn't do remotely as much before. And that's speaking to other business owners and helping them and teaching them what I've learned over 3 decades of successfully running companies. And it's some of the most fulfilling work I've ever done in my life. Instead of just with my head down, working on making money and working on starting companies and working on just how can I make my Monopoly board more successful, right? How can I put more hotels up on Boardwalk? Instead of doing that, I've kind of made money. I've made the money I need to make in my life. And now I'm getting to I'm doing a radio show with my wife, talking about how to live a big life. I'm speaking, and I'm helping a lot of younger entrepreneurs hopefully avoid some of those scars you mentioned before, helping them have it. I can't solve everybody's problem. I can't fix everybody's mistakes, but I can at least tell stories and teach principles that give people a better likelihood of success. We desperately need success amongst the small business class. In the United States, the most recent information we have is from 2015. 86% of gross domestic product, that's the money that was created. 86% of it was companies of 50 employees or less. Small business is critically important to the success of our families, our communities, our countries. And I know stuff that can help people be more successful. So that's where I see myself going, is doing more of that. I've got a television show that is in development. I'm doing lots more speaking around the world. And my desire is to take this next 20 or 30 years of healthy life and pour that information into other people while continuing to have my companies run and grow. So that's what I'm doing.
We feel different when we help people, right? You have this feeling you're actually connecting. You feel better as a human being. This is what it's all about, at least from my end. Regarding books, what have you been reading lately that you would like to share with our listeners?
The first book I always tell people that they should read if they never have is a little book called The Science of Getting Rich. It's written by Wallace Wattles. It was written in 1910. It's kind of an awkward book to read. The way do you know about this book?
Yeah, yes, I do.
Okay. Most people I meet don't know it. I say, get that book and read it because it'll change your brain. There's another book I'll just show you. This book just came out right here. Be Like Amazon. Even a lemonade stand can do it. This is written by 3 friends of mine. They're all New York Times bestsellers. This little skinny book is one of the most clever books that I've ever seen for figuring out how to become customer centric. I can't say enough about this. I just got it. And I read it the first day and I thought, oh my gosh, this is such a phenomenal book. And then the other, if you don't mind me, I have nothing to sell. This is something I give away. And I didn't know you were going to ask it, but I was actually just working on this. But this little book right here, which has my face on it, The Critical 20, this little skinny book that's super easy to read. I mean, look at this. It's like a kindergartner's book. But this little book has some of my very best knowledge from the last 35 years of running companies. It's an easy read. It's free. And I encourage people to read it because it will make a big difference. I've had a bunch of Harvard MBAs and New York lawyers and stuff come back and say, I'm quoting your little book to people in board meetings. So anyway, that's a good thing too. There's another book called Traction that's also a great book to read that I've just read in the last couple of weeks. It's right behind me, I think.
Yeah, I love that book. I love that book as well. And finally, where can our listeners get a hold of you if they have any further questions?
Well, yeah, I'll give you my direct email address because almost nobody will ever email me. So it's never a problem. It's Aaron, Aaron, Aaron at AaronScottYoung.com. So it's just my full name. If you look at the bottom there, Aaron Scott Young. Aaron at AaronScottYoung.com. I answer all my emails. I love getting stuff. I did this recently on another podcast called Entrepreneur on Fire, and I threw that little challenge down, and I got like 300 emails. So I got to be a little careful. Got to be a little careful. But yeah, I would love to do whatever I can to help any of your listeners, Diego. It's and I love what you guys are doing. I think you're bringing great information to people who can really benefit from this marketplace over here.
Aaron, it was wonderful having you with us today. I'll speak with you soon.
Take care.